ICT himself said if you stick to this one silver bullet strategy, you can quit your job and become a funded, profitable trader. He also said it forms every single day and it's extremely high probability. However, a lot of people are missing some key concepts when they're teaching this strategy. So in this video, I'm going to walk you through a refined silver bullet strategy that nobody is sharing step by step with everything you need, giving you the ultimate trading plan. And I wish I had a video like this when I was a beginner, because all you need is 1 hour a day for setup that forms every single day. And trust me, I've forward tested this, back tested this, and live tested this. I'm telling you, it's the perfect strategy, especially if you're taking funded challenges, and it's very rule based, so it's very easy to follow. Let's get into the video. So the ICT silver bullet strategy, and if you want to get funded guaranteed, click the first link in the description. It's a guaranteed pass. The risk management, so we're going to trade 1% per trade, especially for funded accounts or personal accounts. But for funded accounts, 1% per risk max, per trade, max risk is the best. So we're going to look for 10 handles to the next liquidity for indices and 15 pips to the next liquidity for Forex. What this ensures is that there's enough room for your trade to actually work out when you're taking a trade. So let's say you enter, you want at least 10 handles to the next liquidity point for indices, and when you enter the trade, same thing for Forex, however, it's just 15 pips. Now, the POIs we're going to be using, which stands for points of interest, are the liquidity sweeps and fair value gaps. I've done a full video on fair value gaps, so if you haven't already, go check that out. It's a major help. The trading plan we're going to be using is the AM session silver bullet, right? And that's 3 to 4 AM New York time, 8 to 9 AM London time. It's just 1 hour a day, and it's the easiest strategy you're going to get. It's just 1 hour a day on one time frame, and you get a setup every single day. If you don't find a setup within this hour, you can take trades in the next 2 silver bullet sessions, which I'm going to show you on the next video, so stay tuned. Now, on the 1 minute time frame, all we're going to look for is, because there's no daily bias, we're going to look for a liquidity sweep on either side. It could be taking out highs or it could be taking out lows. We don't care. We're going to look for a market structure shift, right, after the liquidity sweep. Then after that, we're going to find our entries on the FVG in the displacement leg, which is basically the market structure shift. However, don't be confused. I've got live market examples, which I'm going to help show you, and it's really going to help. So the entries, as I said before, is going to be off the 1 minute fair value gap in the displacement leg, and the stop loss is going to be at the extreme of the displacement leg. So if you're taking sells, you're going to put your stop loss over the full high, and if you're taking buys, you're going to put your stop loss below the full low, because on the 1 minute time frame, we're on very low time frame, so there's a high chance of you being stopped out if you're being too greedy and you put your stop loss too tight, trying to chase high risk reward trades. And the best way to attack these funded challenges are to take comfortable stop losses with a set risk to reward plan, which is why I got this take profit written out for you guys. So our take profit is going to be at the next draw on liquidity, right, which you found out with the 10 handles over here, which I said at the start. And 5 handles for indices is all you need, for, this is what ICT recommends. For indices, all you want is 5 handles to go in your direction, and for Forex, all you want is 10 pips to go in your direction. This is what ICT recommends. It's from the horse's mouth. And we're going to be going for at least a 1 to 2 risk to reward ratio. Why have I chosen a 1 to 2? Because with a 1 to 2, if you take trades consistently and take profits at a consistent 1 to 2 risk to reward ratio over a series of trades, you will pass your funded challenges. You will pass your funded challenge, and you don't just need one trade to pass your funded challenge. You can take a series of trades, and that will make you a better trader. If you take more trades with a set risk reward and set take profit, you will pass your challenge, and you will do better on the live stage also. So before we get to live market examples, if you're trying to pass your funded challenge or you're looking to get funded, then this automated trading bot is for you. Most people spend $8,000 to $9,000 in the space of 4 months before they reach their first funded account. But with this bot, you can avoid this waste of time and money by letting it pass the challenge for you, 100% guaranteed. Our bot does not miss. It passes the challenge usually in a few hours in the same day. So the day after, you could be funded 6 figures, trading live, making real profits. It's a zero risk investment. If you fail the challenge, you get a full refund. However, we've never ever failed the challenge, so you will be funded. That's 100% guaranteed. Get on this whilst it's still available. Click the link in the description to get funded, and don't waste time. Let's get into the live market examples. So by the way, if you want my session indicator, which is right here, it's called Sessions by Nephew Sam. These are my settings, so you guys can just copy this. Right, so I've rewound it to just before 3 AM. So this is going to be our time window. So the first thing we do is delineate our time window. It's just a 1 hour time window, remember, so it's not long at all. All we're going to be looking for is the setup and the entry to be formed within this time window. However, we can take profits outside of the time window after we've entered, right? And I'll explain this in a second on the live example. So what you want to do is look left, right? When you're on the charts, you want to look left. Price is obviously trading down. Why is it trading down? Well, there was an obvious low right here. that price took out. And as you can see, when price was making lower highs and lower lows, just basic market structure, price was taking out this sell side liquidity every time it made an impulse down. So as you can see, when it made this impulse, it took this sell side low out. When it made this impulse, it took this low out. So it's always taking liquidity, right? However, what are the main sweeps on liquidity? So we're going to look for a liquidity sweep on either side. So as you can see, there's a liquidity sweep to the downside. Now, so we'll tick that off right here. Now, look left, has price tapped into an area of demand or an order block area or FVG area. As you can see, price has made this order block right here and price is tapping into this area right now. So price has swept liquidity. Has it done a market structure shift just yet? The answer is no. So where's our high that we're going to look for a market structure shift at? Right here. So all we do is we let price play out. I'm just going to get rid of this because the session indicator will come up now. Okay, so as you can see, impulse straight away to the upside. Let's see if it breaks the structure. And it has to break structure with displacement. It can't just be a wick break of structure. As you can see now, it's broken structure. So where's the FVG in this displacement leg? So market structure shift has occurred right here. Where's the FVG in displacement leg? Right here. Okay. So all you can do is set your limits right here and place a stop loss below the low. And what you want to do is target the opposing liquidity, right? So where's the opposing liquidity? If you just zoom out, you can see that there's literally exactly equal highs right here. And there's also a major high right here. So these could be your main liquidity, your main draw on liquidity levels. And is there 10 handles at least? So there's 5 handles over here and there's 10 handles at least to the next draw on liquidity. However, if you want to just take profits at a set risk reward of 1 to 2, as you can see, this gets you above 1 to 2 over here at this liquidity level. Or you could take profits at this next main high, whatever works best for you. Let's say we target that main high as a main draw on liquidity. Let's see how price tags us in. Okay, price tags us in nicely. And does it move to the upside? Let me just forward it on the 15-minute. As you can see, price smashes the take profit for overall over a 1 to 6.6, and that's almost a challenge pass because most people, most firms have 8% or 10% target, so that will get you close to passing your challenge. However, if you just took a 1 to 2 risk reward, that's completely fine because you're following a set system, and you can take trades over a series of time, over a series of trades, and then you will be profitable in the end. So there was an FVG in the displacement leg, so we're going to tick that off. So all three to-do lists were ticked off, right? So this is basically a to-do list when you're taking a trade. Let's get into the second example. Okay, so as you can see again, I've marked out the time window that we're going to be trading, and we're going to follow this to-do list again when we're taking the trade, right? So if you just scroll out left a bit, you can see that price has made an established low over here and price has got equal highs again over here. So what you can do is you can mark these equal highs out right here. Again, we've got a high up here. Basically, the equal highs are going to be the main draw on liquidity. And again, we've got this low right here. And we've got this low right here. Remember, there's no daily bias. I'm just going to be on the 1 minute time frame. So you can just wait for any of these liquidity lows or highs to be taken out. As you can see, price is making equal lows on it right now. So price is making equal lows is a sign that it could be swept right here. Okay, price sweeps it. So liquidity has been swept. Now, where's the market structure shift high that we're going to be looking for because the lows were swept? So the highs right here. And all we're waiting for is a break of this with displacement, by the way. It can't just be like a wick break of structure because that is a low probability setup, right? So that does not count as a market structure shift. Okay, as you can see, price is quite obviously broken structure and now it's attacking these highs right here. So where's the FVG in this leg? Is there any FVG? No. Wait for the next candle. Okay, has there been an FVG formed right here? Yes, there has. So just mark that out. Now the market structure shifts occurred and now we're looking for the fair value gap. So we're going to enter off the fair value gap in the displacement leg right here. And we're going to place our stop loss below the full low, below the complete low, right? We're going to put our stop loss at the extreme of the displacement leg, this is the whole displacement leg, by the way. So we're going to put our stop loss below the full low. Target next draw on liquidity or just a 1 to 2. So let's mark it out. Okay, where's a 1 to 2? 1 to 2 is going to land us around there. And where's the next liquidity point? As you can see, it's very close to this liquidity point right here. Mark this out. Like that. And as you can see, is it 5 handles away? 5 handles are literally right there, but we want a solid 1 to 2 risk to reward. So let's just mark that out. Okay, and we're going to just follow our trading plan, and we're going to let the trade either stop us out or take profit. Okay, remember, you don't have to take profits within the time window. You just take profits after it if it's taken too long. Okay, as you can see, price wicks us out for a 1 to 2 after sweeping this liquidity, and it probably hit some sort of high on the left. However, you guys can go and backtest that yourselves. Let's get into the third and final example. Okay, so for this example, you can see I've marked out the time window again, just a 1 hour window, not long at all. So what's price done on the left? So as you can see, we got these highs right here, and we've got these lows right here. However, if you look left, right, if you look left again, you can see price was moving up. You got to ask yourself, why is price moving up? So as you can see, after every impulse up, price was taking out some sort of liquidity. So as you can see, liquidity was being swept over here, okay? And has it tapped into anything on the left, right? So as you can see, has it taken a high out on the left, for example? As you can see, I'll just mark this out with a ray tool, okay? Price has swept this high right here, as you can see. So price has swept a high previously on the left, right? So look for liquidity sweep either side. We're going to tick that off. Now, is there a market structure shift? So this doesn't count as a liquidity high anymore, because we understand that price has already taken out a high. However, if price does take out this high, that's completely fine. We'll just look for a sell in the opposite direction, right? However, this is no longer a liquidity sweep low, right? We've identified our draw on liquidity because we've identified the liquidity sweep. So we're looking for a market structure shift at this low now. Why? Price took liquidity. The next higher low is we're looking for a market structure shift at. So we're going to look for a market structure shift. Now, where's our draw on liquidity if price does go bearish? As you can see, again, we've got equal lows. So equal lows are very common, right? So as you can see, we've got a low right here. You can mark out all of these lows or just target just one specific low. This is the overall low. And remember, you can just take profits at 1 to 2 and then get out of the trade. The market can do whatever it wants after it. However, if you do want to target further levels, you got to look for your draw on liquidity. You got to look for your draw on liquidity anyways, even when you are targeting a 1 to 2. So let's let the trade play out. Does a market structure shift happen? As you can see, yes, body close below. Let me just get rid of this. So the body close below over here. So that's a market structure shift with displacement. So market structure shift has happened. And is there an FEG in the displacement leg? Not yet. Okay, as you can see now, an FEG has formed. After the market structure shift, we can just simply enter at this the low of the FEG, place our stop loss above the lower high over here, the extreme of the displacement leg, and take profit at either the next draw on liquidity, 5 handles because it's on indices, or 5 handles. So where's 5 handles going to be? Going to be around here. And as you can see, that almost perfectly lines up with after these lows get swept in this imbalance area right here. Or you could target just a simple 1 to 2, which will land you around about here, right? But I'm going to say we're going to target the next liquidity low, the next draw on liquidity. This is our next draw on liquidity, and 10 handles away. Have we got another draw on liquidity? As you can see, yes, after these lows get swept, we've got this huge area of imbalance on the left, right? So let's say we're going to take profits at this next main low, our next main draw on liquidity, and all we do is we let price play out. And remember, you're not allowed to be too greedy with this strategy. I've tested this myself, and if you put your stop loss too tight, then you are going to be stopped out, right? Because on the 1 minute, we're on the very low time frame. So we just let price play out. Okay, as you can see, if you were to put your stop loss over there, you would have been stopped out. However, we put our stop loss above the high, and we just let price play out simply. Remember, we don't have to take profits within our time window. We can take profits after it. And as you can see, take profit gets smashed. Does it carry on to the downside? Okay, it does take some time. And as you can see, it takes out that main low overall for over a 1 to 4. And guys, you won't win every single time on this strategy. However, the win rate on this strategy is incredibly high. It's a very high win rate strategy, and you can easily pass funded challenges with this. I'd recommend backtesting this before you jump into any strategy, because with any strategy there are wins. There's no such thing as a 100% win rate. However, with this strategy, it's a very, very high win rate, and you can easily pass funded challenges if you just stick to this plan right here. This plan is right here. It's everything you need, right? We've got the take profit levels, we've got the stop loss levels, entries, we've got the actual training plan and all the POIs and the risk management for you. So that's all for today's video. Just a reminder, if you want to pass your funded challenge, guaranteed, right, zero risk investment. If you fail the challenge, you get all your money back. So I don't know what you're waiting for. If you've got a challenge already, you're gambling your account because there's a chance you could lose it. However, if you buy this, it's a guaranteed pass. Literally so much proof and testimonials in this Telegram chat. So join the first link in the description below to get funded. And by the way, guys, it's a guaranteed pass, remember. So if we fail the challenge, you get all your money back. However, we've never ever failed the challenge. All our clients have been funded by doing absolutely no work. They've literally been funded by doing literally nothing, just buying the challenge and let the bot do its thing. So you will be funded guaranteed if you buy the bot. That's all for today's video, guys. Drop any video suggestions in the comment section down below and let me know what videos you want to see next. Like this video, share it with a friend who's struggling with ICT concepts, and especially beginners, because this is all you need. If you're a beginner, you can literally follow this trading plan back to suit yourself, and this is all you need. I'll see you in the next video. Peace.